So, hello, and a massive hello to everybody. How we all doing? Hope we're all having a great day, great afternoon, great weekend. This is 50 pips, rocking and rolling, 24th of April, 2016. No trade calls and recommendations. Everybody's here having read and understood and accepted the disclosures, disclaimers on the blog, understanding that we're performing some live technical analysis in a learning context for educational purposes only. So great to see a bunch of familiar faces from YouTube, from Twitter. Thank you so much for all the guys who still bother to retweet stuff out. The more the merrier. So again, let's get rocking and rolling. And again, as usual, the format of here is just every month or so we try and do one of these live. So it's just the Sunday review, the weekly review. We're going to review as many charts as we need to. If we got it on the platform, we'll do it. So first come, first serve. Just shoot out the pair or the chart you want to review, and I'll try and get to all of them. If you ask, just ask once. I can see all the questions. I'll get to it sooner or later, okay? Okay, we got the master of the avatar in the room too. Hey, how's it going, man? Okay. So let's get cracking. Yeah, sure. I think here we've got a couple of interesting things going on, and I know a lot of people have been wanting to look at this yen. So let's get started with the yen. Now, again, keep in mind that if you're unfamiliar with anything we're discussing with, just go back and look at the previous YouTube videos, because we do these every week, so it's not like we changed the charts or anything. So the discussion, actually, this one was recorded. The last one was recorded live last Monday, actually, right? Because we didn't do one on Sunday. And basically what we said is, as the market was hovering when we had that gap down, right? What we said is, as long as this area held, probably the 0750s, we still felt that the asymmetric risk reward profile was clearly to the upside, as this was our risk. We had a lot of reward for a repeated bounce, and this is very familiar territory. It's an area which we'd traded before for a bounce, right? We understand that trading this back once again inside this area doesn't necessarily mean it's a very high odds trade, because the more a level is tested, the weaker we believe it becomes. But we think that despite the percentage chance of it playing out maybe decreasing, the risk reward is clearly there, right? And that tends to go with the stats. But lower percentage win rate, right, possibility, but a much higher risk reward, right, as risk being back into the 0750s and reward being back into the 110s. And we've been calling for a potential move all the way back into the in the 115. So this hasn't really changed for us, right? And keep in mind that this is going to be a particularly interesting week. Now, why is this week particularly interesting? Well, we got a bunch of stuff on the wires, right? So tomorrow we have the IFO coming out of Germany, right? Then on Tuesday, we've got US data in terms of core durable goods. We got Bank of Canada, Governor Polo speaking. We got CB consumer confidence out of the US. So fairly interesting data points. And then it really starts on Wednesday. We got the CPIs out of Australia. We've got the FOMC statement. And we also have the RBNZ, right? So a lot of movement there. Then we've got probably even a bigger mammoth meeting, right? Unless the FOMC shocks, as we got the monetary policy statement with the BOJ outlook and the BOJ press conference on Thursday, GDP and US and unemployment claims out of the US, and then on Friday, we got the SNB. So clearly it's a week that's shaping up for an awful lot of movement, a lot of central bank speak, and a lot of possible wheeling and dealing, right? So the way this is looking at, this is just shorts getting squeezed, basically what the BOJ has been saying. So this is a lot of people, this is very, very stretched, with a lot of people getting aggressively short here, now people unwinding. So the move is fairly classical, especially after what's been coming out of the BOJ. So as far as we're concerned, going into the week, look at this previous resistance zone, calling it, the 111 into the 110, now as support, right? So most likely the path of least resistance is probably to try and squeeze as many shorts out and cause as much pain as possible, and then probably some profit taking, ahead of the release, depending on what happens out of the FOMC, RBNZ, FOMC specifically, right? Maybe some people taking some risk off ahead of the BOJ. But unless the BOJ really disappoints you'd expect any pullback, even if it's an aggressive pullback, to catch bids, and we would expect this area to still be interesting with this descending trend line getting tagged, right? And possibly even the 115 if the BOJ gets very, very aggressive, okay? Does that make sense? And again, so as far as we're concerned, this is still in play, no real change in outlook. Again, you know, what we think is really important, and again, not to go off on a tangent, but reading a book or looking at a chart after it's happened, everybody is a hero, okay? That's just the fact. Everybody's a hero. Everything looks good. Every strategy looks so easy, blah, 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 blah. What's interesting is having to deal with stuff real time and looking at things before they happen, right? And that's why we feel that the Sunday Outlook video, which we do, is so important, because we talk about what we expect to happen. We talk about the levels where we expect action to players to come into action, and then on Friday we post it out again to review it. That's what I think is important. After the fact, to be honest, not to be rude, you know, we really couldn't care less about talking about after the fact. What's interesting to us is looking at possible hypotheses, possible scenarios, if this happens then that, but ahead of time, not after. That's just a waste of time as far as we're concerned, okay? So the tricky thing here is clearly that the more this swings higher, the less, you know, the less it makes sense to try and chase this. Of course, you can make some pips to the upside, but the risk reward is clearly not there, and we don't feel it's a sustainable, repeatable, consistent way to make money over the long time if you want to build a career over that, right? And and the problem why I say that is also that if you're holding this, it's a bit tricky, because especially until we started to really pop out of this range here, the stop placement is tricky because it gets very, very volatile and very, very whippy. So you always have to play for that adjusting RR, right? And understand that for these, you have to trail fairly wide, right? Now it's different. Now you can start trailing, you know, we talk about this a lot. You can trail much tighter once the move goes, but before it goes, it's a tricky one to hold. So it's important to have a view. Don't get shaken out of that view because of what somebody tweets, what somebody says. Just focus on the chart, focus on your setups, focus on your plan, and unless some level gets hit, you stay in it and you ride it, okay? So wait for pullback. Do you think you get on the, are you talking about tonight? Yeah, I think it's a really tricky one, right? So I'll give you I'll do what we try and do in the weekly sessions, Rags, right? I'll tell you the technical view and my view, right? So the way I trade is once the moves start, I rarely get back on the move. I like getting in at extremes and being very aggressive, right? Once it's going my direction, I don't really add. I just like to scale out and try and ride them, try and be very aggressive with profits. I'm not that interested in trying to get back into moves. So for me, I would not be getting back into this, even though there are a lot of technical areas where you could look to engage, right? So strictly speaking here, I think there are a couple of interesting zones. You know, should you get a move back into the 111, may be interesting, or even a move back into the 110, because you'll have these two moving averages starting to ride up into this, and this will start to be a pretty interesting support zone. Does that make sense? Now, the problem is always, and as you know, and people always make fun of me, but I always say it depends, right? Because a pullback into this level now, overnight or early in the week, could be interesting, or a pullback into here pre the BOJ may be interesting. If the BOJ disappoints and this completely pukes, there's no way this level is interesting anymore. Does that make sense? So as always, I try and put as much context around the answers, because a lot of people just want black and white answers, but you know, the markets always change, so things change, right? So in the expectation that this will continue to stay bid into a possible expectation of the BOJ, those might be interesting areas. But then if the BOJ really disappoints, I wouldn't touch this at all, right? And the problem is, the risk is that this squeezes, squeezes, squeezes. The BOJ doesn't it disappoint, and it continues to rip, and you never get a chance to get back in. But you know, sometimes the train leaves the station. It's okay not to get back in. But the way this has been trading, hey Scott, the way this has been trading, it's very whippy. So I'm just always very weary because as far as I'm concerned, this is one big chop range. So I'd be very interested in doing something here. I'd be very interested in doing something here, not so interested in the middle. Now, it doesn't mean you can't make money in the middle, but it's just not for me. Does that answer your question? Okay, and again, if anything's not clear or if anybody disagrees, you know, shoot, we can have a discussion on it. You know, that's what makes it that's what makes it interesting, right? Okay. Sure. Yeah, EUROGPB. So this is a pair I really have absolutely no interest in, but I'm going to do my best to try and talk about it with a lot of passion, right? So basically, as far as we're concerned here, it's a lot of wheeling and dealing on Brexit, Ben, right? So to be entirely honest, why am I saying I'm not that interested in this? Because I think there'll be a lot of whippy action on Brexit, and I'm not interested in trying to play headlines. Clearly, if you're trying to play headlines, all you're doing is when the polls are signaling more Brexit chance, you buy the puppy. When polls start going less Brexit, you sell the puppy, right? But that's not really something that's interesting to me. So if you're trying to express a view on euro, I think a much cleaner play would be to express it against the dollar. And if you're trying to express a view purely on sterling, I think a cleaner way to express that view is against the USD. I think Euro GPB is just very muddled, very tricky, and could trade even more on a headline risk than GBP USD, right? So do you have a specific question here? I mean, the way this is trading, as the polls have shifted, this is starting to move back down. There's a cluster of support further down. This is a weekly. If you flip on a monthly, you can see that basically this got sold hard right at a pretty important level, right? But I don't think there's an awful lot of edge here because it's trading a lot on Brexit risk. So if you have a specific question, a specific setup, I'm more than happy to look at it. But as far as I'm concerned, risk to the downside, risk to the upside, but a lot of chop inside. So really not that interested in doing anything. Hey Radu, how's it going, man? Yeah, USD CAD. What's going on USD CAD? So USD CAD, trading a lot on crude, right? What's happening here? So we talked about it last week, and we said that it's trying to do its best to hold a fairly important previous resistance support zone. And as long as it could hold this area, you'd expect it to try and move back up towards the 32s, 33s, right? But that if it let go, you really would not want to try and catch this. And you see what happens. We break down, we get sold right smack into that area, and we continue that acceleration to that target we had to the downside, which is 125.50s, right? I haven't been trading this. I haven't been that interested in this. But right here, the way I would look at this is, if this going into the week, and again, it'll depend a lot on crude, can find some support here. And as we've been discussing on Twitter, which our base case has been for the past 10 days or so, that the dollars to start to firm up and crude starts to cooperate, then I would expect this to try and take a stab back into that 129, and then that 129 to be the pivotal level for the week into FOMC, etc. Either for a rip to try and regain all these moving averages up here, this 135 area, or for a move right back down into this area. So I think here, selling a break of this area for a continuation of the move down is not something I would be too interested in because you've got multiple areas of support here, so I wouldn't be that interested. I think the more interesting thing is maybe if it starts to base to look for possible long setups again here. But I think if you're trying to get long USD, I think there are far nicer charts to express that view, or I would be writing some trades from last week. Okay. Okay, good stuff. Yeah, so no big change on Euro USD. So our hypothesis is still in play, right? So we continue to be stubbornly short, talking about all this failure to break above here being a tell, and the final break below the non-farm payrolls Friday lows to be the even bigger tell for that continuation lower. So we got that move, the retraced higher got sold, and we've been talking about a move back into the 112s for a long time, since we had all these sellers coming in, all these wicks showing us that the market was uncomfortable attracting new buyers at highs and kept on attracting only sellers or buyers or longs taking profits in there, right? So right here going to the week, that 112 is key, right? For us, this is still a correction and a bullish rotation, right? So 112 bull bear line going into the week, BB. Bull bear line going into the week. Hold above, we could see a little bounce, profit taking into FOMC. 1340s is the level. Break, aggressive dollar strength continuing into pre-FOMC. We're looking for 1050s. Now, don't be too anal about the 1050s. You know, it's this trend line here, right? You know, anywhere towards that area, okay? So no big change. And again, post FOMC, post BOJ, if it can hold here, then there could be a chance for some bounces. If we hold below, then this is very, very bearish. And our what we would be looking is for this cluster of support to get taken out very aggressively. So that's below 108s. Okay? Cable is pretty much linked to that EURGBP chart. We don't have an awful lot of interest. We were aggressively long down, as we know we like extremes, and so we'll be more than interesting to look for possible shorts should we come and fail into that level. We'd be more than happy to look for possible longs here. We've been sidelined here. Now, has there been opportunity to make money in the middle of this range? 100%. Have we been trading it? No. But again, so I don't know if you have a specific question here, right? But as far as we're concerned, this really hasn't changed. The only place where we could have forced a trade to the long side, another one, is you see this previous area when we were catching bids, right? This was an area if you were really trying to force a long, but after this initial move higher, we went flat and we haven't been really engaging that much in this area, right? So for me, it's still a lot of Brexit risk right now, as it looks like the stay campaign is getting a little bit more traction. We're rotating back to the upside of that range. If we get a headline or something is going to go back towards, I just don't think there's an awful lot of edge, and I'm not a huge fan. No, there have been a lot of chances to play this intraday, but you know, the purpose of these sessions on Sundays, we try and talk about an outlook that will be relevant at least for the whole week. So you know, there's really no, but there have been some intraday trades, sure, but from a bigger picture, fairly sideways neutral here. Does that answer your question, John? I don't know if you have a specific question on this. Hey, Troy, how's it going? All good? Good to see you live, man. Yeah, what's going on silver? Where I mean, Troy, you should be not a lot has remember we've had this chart up for a gazillion years, right? Since for 2 years, right? And you know, we've been talking about this area 18, 16, 14 on silver, right? And if you go back, you know, even to 2014, right, we were talking about the fact that we expected to put in some kind of long-term bottom into these 14s, and we were looking for this to try and rotate back higher towards the range high and ultimately to this to pop. You know, we're very bullish on all the commodities, right, whether that was crude, whether that was gold, nat gas, etc., etc. So but broadly speaking, it's still inside this range, so not an awful lot has happened, right? And it's been stuck here for a long time. So going back to what we discussed also, or what we usually discuss, there could be opportunities at extremes, but I think inside it's very, very tricky to trade this, right? So I think here, if you were long and you were patiently waiting off those 14s, either you've already taken profits, or you've scaled out a lot and you may be holding partial. That 16 is going to be the bull bear line, but we'll have to see through this FOMC, et cetera, but the way everything's going in terms of central bank speak, in terms of rate, et cetera, longer term, we'd still be holding some long exposure rather than getting aggressively short. Even though there could be some wheeling and dealing inside this range, we would expect that the strong, sustainable breakout will eventually come above the 18 and not below the 14. Does that make sense? And you see the move's been fairly technical too, right? We kept on having these, resistance, then we break above, and then we hold it as support, and we rotate higher back into high range. So, the move's been fairly technical, right? Yeah, it's been tricky. I mean, Troy, because you're in the sessions, right? I was holding the longs for a long time, and then I actually flattened out. So I didn't catch this move, even though I held patiently for ages, right? So but that's just the way it is. You don't catch them all, right? Kiwi, so again, full disclosure, holding short Kiwi, right? A fairly classical setup. So, when we're talking about, Rags, we're talking about, we're looking for this dollar strength to come in. And again, we were expecting, again, going into this RBNZ, we felt that, there's a very good chance that the RBNZ is going to talk it down. Maybe there might be a surprise, but just, dollar to strengthen against Kiwi. So our view was bearish Kiwi, right? Our initial stance was to try and get short on this hold here, right? Oops, I don't know what I did, but okay. So our initial, yeah, the world seems to want to short this. Well, they can have they can join it if they want, but you need to be short already. I had gun to my head, I wouldn't short it here. But anyway, so what we did is we're trying to get short in this whole area here, right? Now, the problem is it kept on holding it above this high, right? So it was a really, really uncomfortable place to try and get short, because also what did we have? We had this rotation with all these moving averages that was providing support, and it kept on making, right, higher highs, lower highs, higher high, lower highs, higher highs, right? So as much as you wanted to short this, at least we felt, it's just not giving you, one, it's not giving you a setup, and on top of it, the market is making higher lows and higher highs, and this channel is being respected quite nicely, right? So patiently waiting, and then, as we got a lot of context in terms of dollar strengthening up, right, what happened is, if you look at it on the 4-hour the other day, you got a very nice exhaustion into those highs, giving you a chance to get short with a very tight stop. And then you just, if you got short on that setup, miracle, just stayed in, didn't break that, but a lot of aggressive defense of that area, right? Even if you look at it on the 1-hour, there was a lot of area defended, and that was the nice short, either, into the first 4-hour, or when it really started to roll. You still had a fairly decent move. When it started to roll, it's tricky, because you had this resistance, previous resistance coming up as support, which it actually started to base, and now it's rolling. So, we're holding short, and we'd like to see more weakness into the RBNZ. Now, the problem here, I think in terms of velocity of the move, it's really come to a lot of structural support. Does that make sense? So, gun to my head, you could threaten a lot of pain, I would not short it here, right? I think it makes a lot of sense to try and hold shorts to see if you can get a lot more extension, if we can maybe gap down tonight and cause some more pain. But this whole area will start to be a place to try and lighten up a little bit, right? Does that make sense? And again, that exactly, that's why I said it makes sense to try and hold here, because who's going to try and catch this now? Everybody wants to get short, and here, it's just starting to take stops to the woodshed, right? And you've got a lot of areas here, so it could be very tempting for it to do a little bit more pain. And then we'll have to see. But clearly, there's a risk of this getting very, very crowded pre-RBNZ. But I think like yen, you might see it would be nice. And I would think it would be more classical if I had to take a bet that tonight we'll see yen extending higher. This trying to try and continue the puke from last week. Because nobody's going to want to really try and get in front of it unless we're closer to those releases or post the releases. Does that answer your question? So that's the way I'm looking at it. But again, then depending, but there's a lot of support coming up for sure. For sure. Okay. Any other comments, any questions, any chart? So, okay. AUDJPY. Okay, AUDJPY. So, full disclosure, I'm pretty sure I've never traded this in my whole life. I'm pretty sure I won't. But let's look at it. Do you have a specific question? Any comments, any questions, any setup you're looking at, any chart you want to review? Let's just try and get a little bit of context here because I have no idea about this. Okay, so it looks fairly neutral. This is a monthly. If you look at this big range, it looks like we're pretty much in the middle of this range. So fairly neutral here, all those moving averages in the middle. If you're looking at it from a weekly perspective, again, it's a tricky one. It looks like it's trying to base, right? I think a lot of people like to draw a bunch of little patterns here, right? And it looks like it wants to try and take out this cluster right here. And if it takes this, it might want to try and accelerate back into this area. The market is making lower highs, lower lows. So again, it looks pointing to maybe a pop-up here. I don't know if you're looking at it for specifically, but again, I think if you're trying to trade Aussie, I'd much rather express the view on AUDUSD. If you want to trade yen, I'd much rather express that through USDJPY. If I had to express something, maybe against GBP, but right. Not a huge fan of this, but that's what it's looking like. I don't know if you have a specific question on it. On the daily, it looks like it's just trying to take a stab up here, at all this level. And if it can, it might take a run higher. But you see it's making, I don't think it's a particularly interesting chart, really, to be honest. GBPUSD, you got a specific question on that? Why is everybody looking at these weird pairs? Who trades these? I'm just joking. Okay, what's going on? What's going on here? Yeah, I just don't like, I think, they could be interesting sometimes, but I think you get much better liquidity, much better spreads, much less slippage on the majors, right? So, but again, there's nothing wrong with them. I'm not a huge fan. Especially if you're trying to trade these with very, very tight stops. I think there's trickies. But again, there's nothing wrong with them. So, yeah, here, so what's looking, we got a rotation higher, right? It looks like it's trying to base into this whole area, into this 50 back. This is probably going to end up being a pivotal zone. If it can bounce off here, you probably see this try to reverse back higher. If this whole area, you see how the 61.8 is coming in line with this little dip too. If that get taken out, expect the 78.6 to come into play very, very quickly, right? I don't know if you're looking at anything very interesting, particular here, but even if you're looking at it on a daily, you know, it looks like it's trying to base here, but you know, you've had a lot of pressure. Again, you know, if we're getting you know, all these if the FOMC does its job, if RBNZ does their job, and we get less and less talk of Brexit, of the Leave campaign, you know, you could get a fairly decent bounce. Probably, you see how the move lower has been very, very aggressive. So if it can try and take some stop outs, you might see a bit of an explosive nature to the upside. But clearly, I would not be too interested in trying to get aggressively short here, at least for now, okay? Okay. Yeah, I mean, yeah, of course, slippage is not an issue if you're trading small. You'll pretty much always get filled, but sometimes on the stops you can get slipped. So it depends on your platform, but you know, it's sure, it's not a big issue. But again, I don't know if you're I don't know if you're one of the guys on Darwinix, or if you've seen the Darwinix stuff, Rags. So if you're, especially if you're in my group, if you're one of the guys, I don't think I've seen you there, but and when you start to get money under management, so you know, a couple of the guys who've been in the top for a while, you know, you've already got a couple of hundred of grand under management. When that's levered up with investors following, you know, you can put ticket sizes in the 6, 7s, 10M, right? So then you can get slipped on those. So you want to be a little bit careful. But you know, but you should look at that. If you haven't looked at it, it's really interesting. Anyway. Okay. So any other chart anybody wants to look at? Anything anybody wants to discuss? Anything we've missed? Let me see if I can get the link for you. Yeah, Rags, I think it's a lot of people don't understand it, but it's really could be a once in a lifetime opportunity. But anyway, don't want to plug that here. But okay, so any comments, any questions? Hey, my pleasure, Troy. We'll stay on as long as people want to look at charts. I have no problem. Got nowhere to go. So just shoot. Yeah, you know, yeah, exactly. You know, we've been talking about this a lot. And, you know, if you remember, this is the BlackRock top, right? When we had everybody getting excited on Twitter, BlackRock saying, you know, they can't not issuing more shares, blah, blah, blah. You know, you have to get short into those kind of peaks, right? Those kind of announcements. So, you know, we've been fairly negative on gold, even though longer term we're bullish, but we're looking for retracement, right? And we're looking for a move back into the 1200, which got derailed here. And we're talking about a gift from the gods would be to see a move back into the 1150s, right? So short term here, nothing has changed, right? It's just very, very whippy, and we're probably just need to get through this whole FOMC BOJ to see what happens. As long as we get, so our view hasn't changed, as long as we get daily closes above the 1250, this will likely stay bid for an attempt to try and take out those highs, but we'd still be sellers into that area, right? And daily closes below, we'd expect it to stay offered to possibly and hopefully try to attempt to move back into the 1200. And if that breaks, then we'd expect very aggressive back down, at least into these two moving averages, right? But right now, a lot of two-sided choppy action in the middle of the range, a lot of shorter term players getting chopped up, and very, very whippy. So not an awful lot of edge unless you're holding a bigger position. But again, you know, think about it in terms of a bigger play. If you're holding short, especially off those 1270s, 1280s, do you have a reason to get out? No. And you're trying for a swing? No, you've got absolutely no reason to get out, right? If you're holding long from those retests into that 1200 or 1210s, do you have any real reason to get to get out of your, not really, right? Still supported, holding that. So that's why you're getting a lot of two-sided action inside range. It's just not a lot has happened, right? So, you know, you can look at the chart as many ways as you want. You can change as many time frames. You can put as many indicators as you want on there. But bottom line, it's choppy, right? Not a lot has changed. It is what it is, right? Sure. Exactly. So you just have to wait, right? And again, all things being equal, is it surprising that the market is kind of in pause and limbo, chopping around key levels when we're going into a week and we've just seen some profit taking on recent moves, when we've got into a week when we've got the FOMC and the BOJ? Not really, right? Because there's a possibility for a lot of market moving information, for the market having to reprice stuff, a lot of stuff going on. So all things being equal, it would be abnormal to see the market move aggressively as if there's no tomorrow, one side or the other, ahead of these two events. If it's going to happen, it'll likely be the next move as a result of these two events having passed, right? Not just before. I mean, it's a really important, yeah, it doesn't mean it has to be like that, but in a all things being normal, it would be a lot more normal for it to behave this way, right, than the opposite way. So again, we always try and look at the market and try to think what would be the healthiest way for the market to move. What would we expect to happen 80% of the time, knowing that that 20% of the time exists and it can be very aggressive, but you can't play for the 20% of the time. Does that make sense? You can't play for a 4 standard deviation move. You can't play for 5 standard deviation move, or even a 3 standard. You can't play for that. You're just setting yourself up. You know, sometimes you can get lucky, and if you get lucky and you call it quits, okay. But if you base a strategy and your trading career on that, it ain't going to end well. It just ain't going to end well. Right? Okay. And again, you know, all those GPB pairs, it's just all a function of Brexit now, right? Now, of course, with GPB, yeah, sure. With GBPNZD, you've got the added kicker of the RBNZ, right? You've got an added kicker of the RBNZ. So here, you know, you're getting the cocktail, the powerful cocktail here is less talk of the Leave camp in terms of Brexit, and everybody expecting the RBNZ to do something, right? So what happens is, you know, two-pronged approach, dollar strengthening and Aussie weakening, so very aggressive move, which is to be expected, right? Now, if you're looking at it from a bigger picture, it's bouncing off. It's very similar. You see how it's the same as that GPBAUD, right? Very, very aggressive move down. You know, is it going to continue, or would it be healthier for it to see a little bit of a retrace? On top of it, you had an awful lot of resistance here that the market tried to clear and is not holding. So as long as it holds above here, you'd expect to see a little pop, you know, maybe possible, you know, it looks like it might have a little gap open there, you know, rather than a drop. But this is the key area to watch for Momo into the RBNZ. But again, it's going to be trading a lot on also Brexit headlines, sure. Yeah, Aussie's another one. Aussie's a tricky one too, but again, it's been holding bid. It's been holding more bid than Kiwi. That's why we've been talking about Kiwi. And again, you know, we always prefer to stick with a weaker pair for shorts and the longer pair and the stronger pair for longs. So here going into the week, what I would say is keep an eye on this breakout zone and this whole area, right? As long as dips into this area holds, this looks like it's trying to put in some kind of a bullish reversal for more extension to the upside, for more strength, right? If we finish through this RBNZ, FOMC, etc., and this whole area here can't hold, and we start to get daily closes below the 75.20s, then I would not be surprised to see a much bigger pullback all the way back into the 72.50s, 73s, right? But if this area holds, I'd be careful being stubbornly short. So I think if you're trying to look for possible longs on sell-offs, I'd prefer to look at Aussie. If you're looking for possible shorts, I'd prefer to continue to look at Kiwi. Does that make sense, Andreas? Okay. And again, a lot of people think, oh, I'm going to try and Kiwi and Aussie, they have to move together. So since Kiwi's heavy, Aussie's not going down, I'm going to get all in short Aussie because it has to catch up and I'm going to make more money. That couldn't be further from the truth. If there's a reason something stays bid and something stays offered. So, even though sooner or later something will catch up, but short term, you want to stay short the weaker pair and long the stronger pair. That's counterintuitive, and that's probably not what a lot of the books or the gurus will tell you, but don't take my word for it. Do some testing and you'll see it makes a lot more sense than doing it the other way around. Okay? Exactly. Okay, any chart we've missed? Anything anybody wants to look at, guys? Starting to get to the 43, 44 minute mark. I think we just don't want to make it too long. If not, the recording takes ages to upload. Okay, guys, listen, have an awesome one. Thank you so much for flying with 50. It's always fun having a live session answering some questions. We'll do one in a month's time. Thank you so much for following. Thank you so much for retweeting, for the likes and everything. I appreciate it. See you guys around. Have an awesome one. Take care and talk to you guys soon, okay? Bye-bye, guys. Thanks.